great news for you, Joe. You're only the second dumbest guy in the country about the cloud. I get great news for you, Joe. You're only the second dumbest guy in the country about the cloud. I've got you beat out in that respect. What we do, and there's no question that I have far less technical knowledge about how IBM works than I do about how Wells Fargo or Coca-Cola works. But we do have 70 plus companies, and when we talk to them, we learn something of their plans, and we learn about competitive products, and we make some estimates. We'll take Wells Fargo. My guess is that Wells Fargo, IBM is their biggest supplier now. My guess is that IBM will be their biggest supplier 5 or 10 years from now. I think that there's a significant difference. Sometimes the location of the information actually has to be geographically specific, but there's certainly differences in the degree of security that people feel they need in terms of storing information on the cloud. And as I talk to CEOs and I talk to our own managers, I feel pretty good about IBM's future, probably more so in what they call the hybrid cloud than the cloud that you generally read about. IBM is it's a trusted organization. It's an innovative organization, and they're competing against a lot of other people that are innovative too. But it's not a winner-take-all game. I mean, search, you might say, comes very close to a winner-take-all game. Cloud computing is not a winner-take-all game.
I understand. Yeah. So there's a hybrid cloud. So right there, you're not the second.
He just one-upped you with the hybrid cloud.
Yeah, you just one-upped me on that one, and you tried not to, but there's, you're crazy. Like, I bet you know a lot more about IBM's strategy for the future.
Don't bet too much.
Yeah, no, yeah, but you're, when you put it that way, with Wells Fargo, knowing that, and they probably have relationships like that with, I don't know how many of the S&P 500, and you're probably right. That's probably going to stay. But see, you're not really looking at it like an Apple or like some type of disruptive, innovative technology now. You're looking at it as an established sort of a brand name that's not as dependent, I don't think, on innovation as some of the newer tech players.
Yeah, well, Amazon, for example, I mean, they just gave their figures out on cloud computing a few weeks ago, and I would guess they have far more customers by number, perhaps, than an IBM, because they made themselves open to all kinds of developers, and that's probably a very good business model. I mean, Jeff Bezos is a very, very, very smart guy, and he got in early, but what he's doing does not. It is not a winner-take-all game, and different kinds of organizations have different needs. American Express is a huge customer of IBM. Our Burlington Northern Santa Fe Railroad, we pay a lot of money to IBM every year, and we're very, very, very likely to continue paying a lot of money. And they'll modify their offerings to things that are more useful to us as we go along. But listen, Microsoft's going to prosper, Amazon's going to prosper, Oracle's going to prosper, but I think IBM's going to prosper too. And I think what they have done from a capital structure standpoint, on top of that, I like very much. I mean, this is a company with they had 250 million of options when they had 1.6 or 700 million shares outstanding, and now they're down to 985 million with virtually no options. One of the interesting things about an IBM, and it's true of other tech companies, IBM earns infinite returns on a tangible common equity. I mean, those are very good businesses, not just IBM. You can take the others, but those are basically very good businesses. We earn a lot of money to Burlington Northern, but we have a huge tangible investment. There is no net tangible investment. They are earning infinite returns on net tangible equity at IBM.